Ladies and gentlemen, good morning and welcome to the Railtel Corporation Q4 FY22 post-results conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Periwal from IDBI Capital. Thank you, and over to you, sir.
Thank you, Lizanne. Good morning to Railtel management and all the investor and analysts attending this call. Thanks for taking out the time and participating in the call. And also would like to thank the Railtel management for giving us this opportunity to host the call. From the Railtel management side, we have with us Mrs. Aruna Singh, CMD, Mr. Sanjay Kumar, Director, Network Planning and Marketing, and Mr. Anand Kumar Singh, Director Finance. So as usual, we'll have an opening remarks from the management team and we'll have a Q&A post that. Ma'am, over to you.
A very good morning to all of you. It gives me great pleasure to interact with you on the company's performance in the backdrop of Q4 audited results of the company, as well as results of FY22, which were declared by the company on 24th of May 2022. The company achieved consolidated operating revenue of rupees 466 crores for Q4 as against 418 crores in Q3 for FY21-22, registering the growth of 11% quarter-on-quarter basis. Year-on-year basis growth in operating revenue for the fourth quarter of FY22 has been 8% as compared to corresponding period of the last year. For the financial year 21-22, the company registered the growth of 12% in the operating revenue with turnover of rupees 1548 crores as compared to rupees 1378 crores in the previous financial year. The company registered growth of 15% with total revenue at all-time high of rupees 1628 crores for FY21-22 as against rupees 1411 crores in the previous financial year. Railtel posted profit before tax of rupees 281 crores during FY21-22 with growth of 43% as compared to last financial year. After adjusting ECL of rupees 38 crores, still the profit is 23% higher than that of last year. PAT for the financial year registered the growth of 47% at rupees 209 crores, which stands at 20% after ECL adjustment. For the quarter ending March 22, the company achieved the PBT of rupees 74 crores. Earning per share for FY21-22 has grown to rupees 6.51 per share as compared to rupees 4.44 per share during the last financial year. EBITDA for Q4 of FY22 is rupees 117 crores and EBITDA margin is 23.9%. The company's EBITDA margin for the financial year 21-22 has been 27.08% as against previous year's margin of 25.23%. The company's core EBITDA margin has increased in Q4 to 20.32% as against Q3 core EBITDA of 16.75%. The company's core EBITDA for financial year 21-22 remained intact at 23%. During Q1 and Q2 of FY21-22, the second wave of COVID impacted companies' working and performance. By the end of the reporting financial year, the COVID situation in India has improved significantly, resulting in normalization of business activity to a greater extent. However, due to the global shortage of semiconductor chips, the project business has been impacted. It is expected that this shortage will ease by second quarter of FY22-23. Your company bagged 7 awards and recognition in FY22, including Award for Excellence in the Financial Reporting for the year 2021 instituted by company's prestigious and highest accounting body, Institute of Chartered Accountants of India. Right now, the order book of Railtel stands at rupees 5,800 crores, and we have been winning multi-crore orders consistently through competitive bidding. We are focused on getting more business, and with COVID situation slowly normalizing and expecting easing of semiconductor chip shortage, a sustained growth in the top line is what we are aiming at FY23. We are also in the process of setting up edge data centers at 102 locations in Tier 2 and Tier 3 cities to take advantage of OTT boom and reducing latency for IoT-based applications. Our retail broadband service, Wire, has reached 4.65 lakh subscribers, and we are targeting for 6 lakh subscribers by the end of March 23. In order to the reach of its services, MOU with various state power transmission companies are being entered into for utilizing their OFC network. The company is working on opportunities of safe cities surveillance projects, IP-based CCTV surveillance system for police stations, district courts and subdivisional courts, smart energy meters, automatic number plate recognition, RFID boom barrier-based weighbridge automation, vehicle tracking, and fleet management system, etc. Railtel is also playing a pivotal role in the implementation of PM WANI, Wi-Fi Access Network Interface project, which envisages creating a nationwide public Wi-Fi ecosystem. We have already launched Prime Minister Wi-Fi Access Network Interface Scheme based access of its public Wi-Fi services across 100 railway stations, having 2,384 Wi-Fi hotspots. It would be extended to all 6,100 railway stations in phased manner by mid-year. Railtel has deployed India's first neutral shared radio access network, that is WAN, at 9 stations of Mumbai Suburban Western Line. Railtel, with its signaling and telecommunication expertise, got a total of 5 tunnel communication projects costing rupees 350 crores, and we are exploring more such opportunities. The technology that we are using is one of its kind on Indian Railways. Expanding our existing stream of business with railways, we intend to become a key player in the National Transporters Plan to modernize train control system over LT4G communication backbone. We are already implementing various projects in defense and coal sector, and also entering in education and health sector. With a robust order book position and continued participation in high-ticket tenders, we are confident about continuing the momentum of profit and growth in future as well. We are committed to provide best services to all our stakeholders and will continue to expand, diversify, and upgrade our portfolio of products. The company is actively working towards successful finalization of RDN tender process, and once completed, it will significantly add to company's top line and bottom line over a period of next 10 years. The company is also aggressively pursuing new business opportunities like cable landing station. For the current financial year, the company plans to invest around 100 to 125 crores of rupees towards capex for strengthening the existing OFC network. The management humbly acknowledges the trust reposed by the investors in the company and would like to assure you all that in spite of the challenges still being faced by the country in general and the economy in particular due to COVID and Ukraine crisis and consequent inflation worldwide, the company is and will continue to strive to achieve new benchmarks in the current financial year and years to come. Thank you.
Should we open up for questions?
Yes, please.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Sanjesh Jain from ICICI Securities. Please go ahead. Sorry to interrupt, Mr. Jain. There's a lot of disturbance from your line.
Is it good now?
No, sir. There's a lot of static from your line.
Is it now?
No, sir. We are not able to hear you because of the static. I'll request you to rejoin the question queue.
Fine.
The next question is on the line of Devesh M. from Investec. Please go ahead. Devesh, your line is in the talk mode. Please go ahead.
Hello, is it audible now?
Yes, sir. Please go ahead.
Thank you for taking my question. My first question was regarding the expected EBITDA margins for both the segments, and the increasing capital employed in the projects business in the last 1 year. So if you can give some clarity on that.
Can you please repeat the question? The margins you are talking about?
So can you give some what would be the expectations or the direction of EBITDA margins for the telecom and the projects business? And can you explain why was the total capital employed for the projects business increased in the recent quarters?
The EBITDA margin for telecom and for project will be of the order of 20% and 8 to 10% respectively.
Okay.
And what is your second question, please?
The increased capital employed in the projects business. So can you explain that? Why did that happen? It has increased by around 83% YOY.
I think your question is not getting clear to us. Can you please repeat your question once again?
Towards the
Capital employed for the projects business.
Capital employed toward the project business. See, in project businesses, there is no capital expenditure from Railtel side as such. Those are the projects Railtel executes on behalf of our customers, and they pay towards the expenditure we make. There are no such projects where we are investing from Railtel side. Is that clear to you?
Okay, yes. Can you also give what is your future view regarding the content on demand business and the railway display network?
Railway display network tender is already floated, is already invited, and we expect it to be decided very soon, maybe by mid of July. And regarding COD, we are shortly coming up with the tender again.
Okay, that will be all from my side. Thanks.
Thank you. The next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Good morning. Is now fine?
Yes, sir.
Can you hear me, sir? Yeah. Thank you, ma'am. Thank you very much. Good morning, everyone. I got a few questions. I'll go one by one. First, on the project business, the execution is slow. We understand that you did mention the shortage of chipset while we keep accumulating the order book. For entire FY23, assuming that in Q2 the shortage on the equipment side normalizes, what is the execution for the project business are we expecting in FY23?
See, we cannot disclose such figures as of now, but we are hopeful that from Q2, as ma'am has already mentioned in his opening address, that from Q2 the supplies will be easing out, and we expect to achieve a good number by the end of FY23.
Fair enough, sir. Fair enough. No, I'm not asking how much we will book the revenue, but considering the order book we have and the commitment we have given, what is the kind of execution which is required to be done by the company, assuming that things are normalized, right? We are not looking for a guidance. We are just asking in terms of the age of the order book. So what is that, assuming this order book remains here, what is the execution we are expected to do out of this 5,800 crores order book this year, next year, and year after that?
So these projects will take 6 to 9 months time.
Okay. And what percentage of all the project out of 5,800, which is 6 to 9 months of execution?
This order book actually is spread over a period of 3 to 5 years, because there is a capital expenditure portion where a fixed cost, where you get one-time cost paid by a customer, and there's an AMC portion also, which is spread over 3 to 5 years period. So in that view, you can say that roughly around 40 to 50% is the capex portion, which will be executing and then getting completed.
Okay. So 40 to 50% is the capex part of the business, and remaining is the usage-based revenue or a recurring revenue, AMC kind of a revenue for 3 to 5 years.
No. Let me complete. So few may be 40 to 50%, few may be 30%, few may be even more.
Sandesh ji, this is DXP side. If I can supplement what DNPN sir just said, around 40 to 50% of the order will be executed within the period of 9 to 12 months, which is the capex part. And the balance 50, now I'm giving an average, balance 50 part will be over a period of 3 to 5 years. That is the AMC part.
And margins in the AMC will be better than the initially when we do the capex. Is that the right understanding, Anandji?
Obviously, we do the overall margin calculation, which is 8 to 10%. Obviously, that spread is there. But 8 to 10% is the overall project margin, which we say. We do not bifurcate it.
There is one more aspect which you should consider, is that there are milestone payments. So even if we complete the project, many times milestone payments are not due. So it's possible that the payments are received in the FY24 also. So that's not, you should not take that if we complete 40 to 50% projects during this year, we get the milestone achieved, because there are sometimes 6 months monitoring period or something like that. So there are milestones related to each and every project, specific to the project.
Fair enough, sir. Fair enough. And this AMC revenue will be booked in the project itself, or will be booked in the telecom?
Obviously, it's a project business revenue, so it will be booked in the project.
Right. And we also have some revenue accruing to telecom because of this project revenue, like we have told that.
I got your point. The few of the projects where there is a mix of telecom revenue as well as project revenue. So that telecom revenue is of course of recurring nature. And you know the margin in telecom revenue is much better than the project revenue.
Right. No, so when we say 5,800, that also includes the telecom revenue, or that doesn't include the telecom revenue?
Yes, it includes telecom revenue also.
It includes telecom revenue.
These are new orders. These are new orders apart from the existing orders which we have in telecom.
Got it. So how much in the order book will be revenue which will be booked in the telecom services out of this 5,800?
You can take roughly around 20%.
Okay, 20%. Okay, got it. Thanks for. And why was the project business margin, EBIT margin in this quarter was very low at 3% What led to shrink in the margin in the project business?
I'll take this. As CMD ma'am just pointed out, because of the semiconductor shortage, we were not able to deliver one major project in a big way.
Okay.
So, and the projects that were delivered basically were of different sector, which had a very tight margin of 3 to 4%. So you will see in the quarter per se, there is a dip in the margin because one big margin project could not be delivered because of the crisis. But overall, you will see the margin is around 8 to 10%. Hopefully, in this coming quarter,
defense project is over, right? This low margin project, or we still have more in the book?
See, they are project margin.
Sorry to interrupt. There's a lot of disturbance. Sanjesh?
Yeah, I can hear.
Now it's okay. Actually, the project, when we bid for projects, mostly we are getting on through competitive bidding. So the margins in various projects is decided based on many factors, including the expertise of Railtel, because many times they are QCBS based standards, competition in that particular RFP. So margins are not uniform over all projects which we get through competitive bidding. So that is why, incidentally, during Q4 of last FY, the project which DF has also explained to you, they are one big margin project which we was contemplating to complete, could not get, but overall in average, we assure you that the EBITDA margin will continue to be in the same range, 25 to 27%.
In FY23 onwards, right? This is for the company as a whole, right? This 25 to 27%.
So there can be incidental variations, aberrations, but overall in average, we are very sure that we will have a healthy EBITDA margin in the coming years.
Fair enough, sir. Fair enough. That is pretty much clear. And going into a little bit detail into the telecom services revenue, can you give us the segmental revenue growth for FY22, the three segments? NLD, ISP, and the
yes.
one.
For NLD, on a consolidated basis, we grew by 10% over last financial year.
Got
ISP it. Grew by 37%. IP1 grew by 14%. Other project business.
ISP was? Sorry, I missed
37.
37%. And this was predominantly because of the railwire.
Railwire, yes. And IP1 grew by 14%. So you see there is an all-round healthy growth in the telecom sector. Other projects grew by 29%.
Got it. And what is expected growth for telecom service in FY23?
See, we have maintained a telecom on a totality basis. The telecom sector has grown by 18% in the current financial year over the last financial year. We will continue to maintain this and exceed it.
See, this growth pattern is going to be remain in the same pattern, because NLD, what is happening? The capacity is growing, but the NLD tariffs are going south. So that is because of that reason. NLD growth is not seen in terms of money, but the traffic is growing.
Okay, but prices are declining despite that the volume growth is so much that we will still be able to give a positive revenue growth.
Yes. The volume will make up for the in the decrease in the tariff. The volume will make it up, more than make it up.
Got it. And all this, we are still not including RDN and COD in this, right?
No.
That will be over and above these, right?
No, they are not.
They are not, right? So RDN, whenever the tender happen, and COD, whenever the tender happen, post that will be an incremental flow through to our margins, right?
It will, in a substantial way.
Got it. One on the cost side, why has the employee cost inflation be so high this year?
The employee cost includes the PRP portion which we pay on an annual basis, and the pay and allowances are all guided by the structure which is paid by the pay commission.
Correct.
So basically, the impact of the PRP has come. 2 PRPs have come, and the provisioning which we do on a regular basis.
Actually, earlier there was delay in payment of performance-related pay to employees. So last year we are now at par with the. Last year we paid performance-related pay for 2 consecutive years. That is why the employee benefit expenses seem to be slightly higher.
There is an actual payment of PRP and provision for the current financial year also. So all taken together and considering the pay structure of the employees, the employee cost appears to be on a slightly high side, but there is no substantial addition in the employee strength.
Okay. And this has completely been booked, right? From next year, none of the accruals are left from the earlier CRC revisions now, right? For FY23?
Nothing on account of pay revision, but yes, the PRP accrual will be considered as we go forward. Every year we consider PRP provision for that relevant year, though paid in the next year.
But that is already significantly in our number. From here onwards, that there is no inflation to that CRC payment, right?
No, there's no backlog.
Okay. One on the edge data center, which ma'am spoke in her opening remarks, quite interesting. We are looking at 100 plus kind of a edge data center. This 100 to 125 crore capex include the edge data center, or will it be done by the Railtel and will be funded by Railway? How is it? And are we building this edge data center on the basis that somebody has given us an anchor tenant kind of a position, or we will build and then go to the market and try to fill it?
Sanjay, nice question. First, let me clear, as ma'am said, 100 to 125 crore capex is for strengthening the OSC network.
Correct.
I hope I'm clear there. As regards edge data center, it will be a PPP model which will be entirely funded by the partner who will come on board. This will be on a revenue sharing basis. So we will not be incurring any capex in this regard. And the data center
will be given by the railway?
Pardon?
Land will be given by the railway?
Yes, we have the right of way. We have the land in the POPs we have, which we will utilize. The normal rental, which will be as per the agreement, will be paid to the railways by the franchisee who will be taking up this job. They will pay for our broadband connection also, our network also. They'll pay for every cost will be borne by them, and thereafter the revenue sharing model will be worked out.
In a sense, this is similar to RDN and COD.
Got it. So again, we will come up with a tender for this, right? It will be again a tender process, and once the tender is approved, the partner will come and he will do.
We have already invited partners for empanelment.
Okay.
And the evaluation of empanelment is going on. Post this empanelment, we will come out with an RFP.
Got it. So can you give us a rough timeline on what are we looking to closing the tender for all the three ones, which is RDN, COD, and the edge data center? Rough timeline. I understand there is no hard and fast, but what is the internal anticipation, or what is the internal target?
RDN, I told you by July we are expecting RDN.
Okay.
Maybe slightly here or there. About COD, we'll have to wait for at least one more quarter, maybe by November.
Okay.
And this edge data center maybe by Q3, end of Q3.
Fair enough.
Things will be visible from Q3 onwards, because this requires a lot of surveys and those things at 100 places.
Mm-hmm. No, sir, I understand that, but fairly enough. So we have a lot of tailwind for FY23, the way I look at it.
Yes.
Certainly times look interesting for us. So best of luck from my side, and hope to see a much stronger result from Railtel.
Thank you, Sandesh.
Thank you, ma'am. Good day.
Thank you. The next question is on the line of Swecha Jain from ANS Wealth. Please go ahead.
Hi, thank you for giving this opportunity. I just have few clarifications here and there. First is regarding the...
Louder, please.
Yeah. Can you hear me now, sir?
It's okay. Clear.
Yeah. Okay. So regarding the telecom segment, I just wanted to understand, usually we used to do an EBIT of 25%, and, that was also the guidance, that we were targeting. But in this quarter, the EBIT margins have come down to 20%. And I think you've also guided in the earlier participants' answer that, telecom would do a 20% kind of margins. So should we assume that 20% EBIT margin is something that we will maintain in telecom on a sustainable basis? Or do we expect this to, going back to 25% kind of a number?
It will be in the same range. You can assume it to be 20 to 25%. Because technology changes are also happening very fast. So we assume to be in the same range, 20 to 25%.
Okay. And so you were also mentioning that, we are seeing good growth in telecom. Segment-wise, you did give us the growth. So just wanted to understand, just a clarification. So basically, we are saying the telecom sector primarily will grow. The contribution will mainly come from rail wire, right?
Yeah.
So do you see any other segment also? Yeah. Sorry, sir. Go ahead.
Yes, rail wire, see, the telecom sector business will continue as we are doing, but any growth which you are anticipating or which you are pointing out, will come from the rail wire side.
There's another factor which will contribute to our revenue is post this 5G spectrum coming out. The country will have requirement of a huge number of towers. And Railtel has good potential to provide the tower co-location to the service providers. So that is also, but I don't know whether this year we'll be able to. It depends upon the spectrum, success of the 5G spectrum.
Right. So, and ma'am, in her opening comments, did mention 4.65 lakh subscriber in Railwire, and we are targeting 6 lakh in FY23. Am I correct? I kind of missed that number.
Yeah.
Okay. Thanks. And also, regarding the project in COD, RDN, and Edge Data, so you did mention that we plan to close the tendering and entire process by July 22, November 22, and end of Q3. So typically, when will the revenue start, coming in all these segments, the RDN, COD, and the Edge Data project?
RDN and COD, there is a provision of minimum guarantee. So revenues start immediately as soon as we award the work or award the project. So there's no time lag. And revenue sharing will start subsequently, of course, when the project is live. As far as edge data centers, it will take time because you need to build the infrastructure. So that is time taking, and we hope that semiconductor chips supply issue also get resolved by the time we come out with the winner partner.
Okay. So any potential revenue number?
You can assume to be maybe September 23.
For the edge data center revenue.
For edge data center revenue.
Okay. So any potential revenue that you can guide us in the entire data center project, because you're trying to set up 100 to 125 centers, right?
We can't say right now, though there is a lot of traction. A good number of people participated in pre-bid meetings, but depends upon the response to RFP. So, but we are very much hopeful that it will give good business potential. It has a good business potential, but we can't tell about the numbers right now.
Okay. So I have just last two quick questions. So in the receivables, receivables have come down. But if you can just give me out of the current outstanding receivables, how much it is more than 6 months old, and do you think we need any more provisions in this receivable going forward?
Now, yes, the receivables in FY22 has come down.
Right.
The provision, if you will see the financials, there is a write back of provisions for ECL which was done in previous years. Write back whole year is to the tune of 39 CR. Okay. So we are on a path of realization. Yes, we have realized a substantial amount in the financial year gone by, and we will continue to maintain the drive on realizing the receivables. So I don't foresee any provisioning in regards to the debtors.
Okay. And sir, how much of it would be older than 6 months from this, sir?
older than 6 months. See, we
greater than 6 months, yes.
But if I can share only greater than 3 years, which is a cause of concern area, is only 10 CR, out of which, sorry, I stand corrected. Greater than 3 years is 100 CR, out of which few amounts are under litigation. But we are working to realize the same. We are working aggressively to realize the same.
Okay. And so last quick question. Would you be able to give any, revenue and margin guidance in FY23 for the project business, sir?
8 to 10%?
8 to 10%, the margin, right?
For the project business.
Yeah. Okay. And any revenue number that you can guide?
A top line growth of 20% plus, as ma'am said. We will sustain the growth which we have achieved, and we will continue to outperform that.
Okay. Thank you so much. Appreciate this. Thanks.
Thank you. The next question is from the line of Apurva, an individual investor. Please go ahead.
Yeah, ma'am, actually, all my questions are answered in the previous calls. Thank you.
Thank you.
Thank you. The next question is from the line of Nilesh Doshi from Prospero Tree. Please go ahead.
Hello.
Yes.
Yeah, sir. Thanks for the opportunity, madam. Sir, I would like to draw the one attention that the company has the possible 2 new revenue generating projects, namely COD and RDN. The COD was supposed to start in the Q1 23, but now it is informed that the tender is floated, and the RDN is once again it is postponed. So whether it was because of the non-participation of anybody or because of any litigation with the earlier bidder, namely the G Group was allotted, the G Group was the successful bidder for the earlier for the COD project. Can you throw some light on it?
Yeah, there is no relation with the litigation, whatever going on with the previous partner, number one. Number two, recently what is happened, because these 2 projects are the capital hungry projects, and post this Ukraine crisis, the investors are actually playing very cautiously. So they are asking many questions, and we are continuously in touch with them. The COD tender we are yet to invite now, but RDN tender, we have seen that there is good traction among the investors.
So, but do we have received any bidders' interest for the COD project, or it will be once again the process will begin once again?
No, COD tender has to be invited once again.
Okay.
RDN tender is already on it and is likely to be opened in the end of June.
Okay, sir. So, this is the second question is related to ECL provision. It is very difficult to understand because in the last year we have made some provision for the ECL, and this year we have reversed back the provision. If we exclude the ECL provisioning numbers from the PAT number, say this year we have reversed the provision around 38 crore rupees, and in previous year FY21 we made the provision of 83 crore rupees. If we give the reverse effect, then the PAT is actually down. It is my understanding. Am I right, sir?
Doshi, I'll take your question. I've received your mail also in this regard. We have to see in a clear perspective. Last year provision which was made can be compared with the profit PAT of the year before that. The provision was made in FY21 of 83 CR. Now with the rationalization and realization of the receivables, the write back has taken place to the tune of 38 CR. As CMD ma'am had pointed in her opening remarks, if we see the PAT, the margin position, if the PBT is 43% above and the adjust the ECL right back, it is still 20% above.
Yes, the margin part is correct, sir. But because the ECL is a book entry, and if we remove the ECL entry, that this year the ECL is reversed, and so there is a other income of 38 crore rupees. If we remove that 38 crore rupees, then the PAT is adjusted PAT will be the 171 crore rupees, and for the previous year it was 226 crore rupees.
But in that case, sir, as what you are calculating is you are removing the entire 83 crore, but there was some part of ECL for the last financial year gone by.
Okay, sir. Fine.
Sir, I'll just clarify your doubt because I understand. I admit that there has been margin pressure on the margin this financial year because of the crisis and the semiconductor chip shortage, which we were not able to deliver the project. But this is a one-off case, actually. Going forward, you will see the margins will continue to remain healthy.
And I think moreover, this cycle of ECL is started, so this will continue to be there. Some reimbursement will always continue to get. So we cannot basically evaluate these things in a perpetual manner because
CMD madam had enough brought this out that the adjusted PBT, adjusted PAT stands at still a healthy growth.
Yes, sir. But I still feel that if we remove the ECL part from the PAT, which is the normalized profit of the respective year, then the profit for the current year is lesser than the previous year. That is my understanding. Anyway, you are saying that the margin may improve.
We will clarify it separately. When we have grown on the top line by 12%, obviously the profits cannot go down. This is normal. But yes, I'll come back to you separately.
Okay, sir. My last question is related to the order execution. The earlier participants have asked and detailed answer is given. But see, the company's order book is very healthy of 5,800 crore rupees. But sir, only the order book will not generate the profit for the company. It is the execution level which will generate the profit. In many companies, we have seen that there is a very good order book, but they could not execute in time manner. Can we expect now the run rate of the execution will improve in a substantial manner so that there will be a margin improvement and the execution will improve?
Actually, if you remember, I have already said that this semiconductor chips problem earlier in Q1 of the last financial year, the COVID pandemic, the severity of the COVID pandemic in phase 2. So these were the issues. Now we are coming out of COVID as well as we are seeing that there is traction in the semiconductor chip supply chain also, though it is coming out slowly out of the delays. So we hope that not substantially but slowly it will recover, and by end of 2023 we are confident that we will be able to achieve a very good number.
So does it mean that it is the semiconductor which is the only problem for our execution, or it is the other problem also?
Semiconductor chips is a very, actually is a major problem now, as of now, because projects are getting delayed. OEMs are not able to supply the equipment we need to execute the project.
But the person who has given the order will charge any liquidated damage or anything? Is there provision? So rather than making the profit?
In fact, since most of our customers are government customers, we take them on board when we speak with OEMs also.
Okay. Thank you very much.
They are also helping in getting those supplies when we talk.
Okay, sir. So I can expect that the FY23 will be much better in the execution part at least.
There's no doubt about it.
Okay. Thanks, sir. Thank you very much, sir.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Vishal Periwal. Please go ahead. Mr. Vishal Periwal, please go ahead.
Yeah, I'm audible?
Yes, sir.
Yeah.
Okay. Sir, before any question comes, I have to ask a couple of them. Sir, I think you mentioned the revenue growth for FY23 in the range of 20%. So this is at a consol level, or you mentioned the project side, this 20% kind of number.
Consolidated level, please.
Okay, fine. And second, coming back on the margins, I think there was a previous question also. In this quarter, it was around 19% EBIT margins for projects. And going ahead, the target range is like 20 to 25 odd percent. So can we say that this is probably bottom that we have seen in terms of margins for telecom?
The project,
the telecom
EBITDA margin, what we have stated is slightly lesser for the project sector. However, including the telecom portion, it will be in the range of 20 to 25%.
Okay. No, I was coming since I think we give segmental result also. So, our at a EBIT level, the margins are at around 19-20 odd percent, and our guidance is for the next year it is 20 to 25 odd percent. So, we're just trying to understand, is it the bottom that we have achieved in this quarter, and probably things should look better in the company?
Indeed, because every one of us have gone through this COVID situation, and every one of us know about Ukraine crisis. So maybe this is the bottom one which we have already reached world over.
Okay. But ma'am, is there any implication in terms of margin? What exactly drives the margins to move up or down, or probably the couple of macro factors which you have mentioned? So, what could drive the margins higher in the next year? Maybe qualitatively, if any thing can be explained.
See, we have always maintained that we are committed to maintain our margins in the healthy range. This Q4, as you have also already got it accepted, that Q4 has been an aberration. So and on overall basis, because different projects come with different margin, and we have a mixed bouquet of orders. So I'm sure that this will continue to be there. There's no single factor which we can point out or we can single out for contributing to margin. As I told you during discussion today, that there could be competition in some single projects, and then margins could be low. There could be other projects where we see that the competition is not there, and we have a very niche experience. So then there we gain on margin account. So there can't be a single factor which we can single out.
Okay, sir. Okay. And then in the project side, I think overall, I think there was a comment made that other projects in the project segment, it has done a pretty strong set of revenue growth around 29 odd percent, and for the full year basis. But if you look at the margins for company as a whole, in the project side, though the proportion for the railway has come down and other projects has increased, but still the margins, if you look at it, has come down in FY22. Is it purely because of the content on demand, or because the understanding was in railway side of project the margins are less, in the private side, which is other, the margins are higher. So just wanted to get some clarification.
Content on demand is certainly a major factor for 22. You are right.
Okay. And next, sir, I think a bit of clarification only. I think you mentioned 5,800 crore is the order book in the project side. The division is 20% telecom, 80% is the project. Is that right understanding?
Yeah. No, it will be slightly. It will be more. It will be more. Telecom project segment is hardly 40-45%. So telecom is 55%. Roughly.
Okay, so it's roughly like half and half. And in the telecom side,
telecom is more than project. But yeah, in coming years, projects would be overtaking telecom.
Okay. No, I was saying on that order book, I mean, like the revenue.
Yeah, project order book. You are talking about project order book. Project order book, yes. 20-25% is there. Sorry.
It's telecom. Okay. And then just a clarification, when you said 20-25% is telecom, so that is spread over maybe like over the next 8-9 years?
Yeah.
In terms of our revenue. Okay.
5 to 8 years.
5 to 8 years. Okay. And remaining
there are projects of 3 years, 3 years term also, 5 years terms also, and 8 years also.
Okay, okay. And remaining the 80 or 70 or 75% of the order book, which we do as a kind of one shot, like, once we execute, we book the revenue. So that is, what is the timeline that you mentioned for execution of that? Maybe you can just clarify.
I think we have answered this question earlier also, that there would be some projects, most of the projects will be over by 24 months from now, and 50% of the projects would be, because there are completion period also. Some of the projects, they require 24 months to execute itself. So as I told you, I think mostly 50% of the project will be over by September 23.
Okay, in the next
the milestone, the payments would come based on milestones defined in those projects, because there will be a warranty period, there would be AMC period. So if you talk of total completion of projects, those will of course extend to 5 years or 8 years.
Vishalji, if I can just supplement what DNPN sir said, you can take it, the range of execution is 9 to 24 months, major. A few of the projects will be beyond that.
Right. No, sir, I think basically, I think investors are having this main query. The order book is there. When can we see the execution? Which quarter, probably the things will, or probably the needle will move for us. So we're just trying to understand with this regard, like, what exactly the breakup is. And then I think, you clarify it.
This order book which you see is 5,800 crore. There are orders which we must have got maybe 5-6 months back. There is an order which we got maybe yesterday. So there is a time gap also among the orders also. So maybe one project which we got today, it has a timeline to complete from the customer itself for 24 months. So there's no, if we get a project, generally we complete it in 6 to 9 months maximum.
Okay, okay.
From the date of award.
Right, sir. Right, sir. I think probably I would like to thanks also, like, though I'm not giving a closing remarks, but thanks to the management, like, because in the last 2 odd months, we are seeing consistently a lot of orders, have been received by us that what we notify to exchanges, and probably we look forward, to the execution. Maybe one last thing, and I'll come back in the queue. Sir, any comment that you would like to make on the modern train control system? I think that will be helpful.
See, this modern train control system which our national transporter is planning is based on Kavach. It's an indigenized technology, presently working on a particular frequency in UHF band. And they already have a spectrum for LTE 4G. Since Railtel has the edge of having exclusive rights of tower and the fiberization in the railway area, the company expects that no sooner Kavach with LTE is successful, Railtel will get a major pie for this LTE portion.
Okay. Ma'am, just on this, I think like a couple of timelines have been given, like COD by November, RDN by July, Edge data center by Q3. So anything that we can say that, like, probably when can some sort of traction or probably orders that we can get, any timeline?
As soon as we finalize the order, like RDN by July and COD by November, the orders will be placed on the partner, and revenues of course will start be coming.
Yeah, sorry, I was saying that the way we have given timelines for all these, for the same thing, modern train control system, anything that you see right now, or is still
that will depend on the success of the coverage being tried out on LTE, and we should get this information, say, by third quarter. The trials are already on between CDOT and Indian Railways.
Okay. Sure, ma'am. Thanks for the clarification. I'll come back in the queue. Thank you.
Yeah.
Thank you. The next question is on the line of Sweta Jain from ANS Wealth. Please go ahead.
Hi, ma'am. I just have a quick small clarification. For the telecom segment, you said the EBIT margins, sustainable margins would be 20-25%, right?
Yes.
Yeah.
Okay. So right now we are at 20%. So we do see that it may go up from here, right?
Yes.
Okay. Yeah, that's it, ma'am. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants in the conference, if you wish to ask a question, you may please press star and 1. As there are no further questions, we now conclude the conference call. On behalf of Railtel Corporation, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.